morning. Welcome to IG's Early Morning Call. It's Wednesday, the 12th of April. Let's take a look at the headlines. We wait the start of today's European session. We are monitoring news out from the International Monetary Fund. It's cut its global growth forecast and says the inflation fight is not over. This means that central banks could still be raising interest rates. We've got the Bank of Canada on its rate meeting today. Meanwhile, the US dollar is unchanged ahead of some important US data out today on consumer price inflation. It's expected to accelerate now, having seen much of the last year's gas price inflation taken out of the market. And as you have your breakfast this morning, sugar is at an 11-year high. This comes alongside coffee, which is also on the way out today as we see global supplies shrink of both commodities. Take a look at what's happening in volatility. We've been monitoring what's been going on recently with this volatility draining out of the market. We're still above 20.82 to be precise. We're currently at levels not seen since the 9th of March. This big candle that we saw on the upside there in the middle of the chart is really the obstacle to overcome. To look at levels of support, we're looking at 1965. Now, anything below 20 is generally regarded as something which means it's a little bit more difficult for us traders to get a bite on the market. In other words, the markets tend not to move quite so much in terms of its overall market if it's under 20. So the volatility is approaching that at 20.82, still bumping along at recent lows for that index. Now, this means that these equity markets are still enjoying a little bit of a lift. This is the FTSE 100. Yesterday, we achieved levels not seen since Friday the 10th of March. Today, we're looking for a slightly lower start. If I change this onto 30-minute candles, you can see that there's a little bit of pressure building, not too much. This was the vertical dotted line here, was the point at which the London markets closed out Tuesday's session at 4:30. So you can see we're just a few points below that. So at the moment, at least, we're potentially looking for a slightly lower start to the trading day here in London. But it really is a fight between bulls and bears today. And it's the same sort of story as we see the German markets yesterday climbing very close to levels there intraday not seen since January 2022. But the markets, as I say, like the London markets, not too far away from recent highs. Talking about recent highs, all-time intraday record high yesterday for the French CAC 40. Just want to show you this move up that we've seen in the market, having beaten that level we were at back in August 2000. When was that? That was, first of all, December last year. A year or so ago, and then since then another push higher, and we've got these markets just below yesterday's all-time record high on the French CAC 40. So you can see that's the way in which the markets are behaving there at the moment on the European session ahead of the start at the top of the hour. Let's catch up with what's been happening in the Asia-Pacific markets. A little bit of pressure building on the Hang Seng stock index today, but outside of that, it's generally speaking been a good day for the APAC equity markets. The Nikkei having closed up 0.2% and gains of just around about 0.5% for the ASX 200. Hang Seng stock index still has an hour or so of the trading day left there to go on the cash session. You can trade all these markets 24 hours on the IG platform. Let's remind ourselves as to what happened last night on the Wall Street close. The equity markets, generally speaking, on the way up for much of the session, and then came a little bit of a dip. Nasdaq Composite actually ending down almost 0.5%. S&P 500 was flat, but the Dow Industrials, one of the better performers, actually, it has to be said, recently, yesterday intraday, if you look at the chart here, yesterday intraday, it punched up to levels not seen since the 20th of February. If you continue to be long on this chart, we've been talking about this since the lows that we had, which were back on the 15th of March. The market has really been performing quite well and continues to see this rise. These are older, more traditional stocks. From the lows to the highs, we're up 7.5% to the high point we saw yesterday, which I said with highs not seen since the 20th of Feb. And we're building on it at the moment at 33,692. Tech stocks on the way down yesterday. A little bit of a fillip for tech stocks this morning, I think, as a result of an interview that Elon Musk has undertaken with the BBC this morning. And the conversation got round to Twitter. Now, Twitter is, as we know, off market. But nonetheless, he was suggesting that all the advertisers have now returned to Twitter, and Twitter is now close to break even. What happens in the long-term picture remains to be seen. Could it well come back to the market? It's a possibility. but at the moment at least, it's not necessarily of any interest to us traders. But I think the anecdotal evidence to suggest that advertisers are coming back to Twitter indicates something about the digital advertising market, I guess, in part. This is the Nasdaq down for a second day in a row on the 24-hour markets today at 12,946. Take a look at some of the economic data out overnight. I want to take a look at what's been happening in Japan, where the producer price index remained flat in March month on month and rose 7.2% from this time last year. Now, this follows an 8.3% increase in February. This indicates inflation amongst producers continues to be fairly high. And this, I think, will continue to weigh on the minds of those rate setters at the Bank of Japan, with the new governor of the Bank of Japan taking the helm just recently. Clearly, there may be this new era of slightly tighter monetary policy. Ahead of that, look at what's happening with the Japanese yen. This is the dollar rising against the yen. We're very close to the top of this line of rising resistance at 133.76. I think if we get a candle close beyond there, you're then looking at these levels up here, which will be the highest not seen since the 8th of March. And that includes the 200-day moving average, the red line here at 137.16. If you're long on this, stock goes below recent price action around about the 131.50 level. If you're long on the dollar against the Japanese yen, that's a weaker Japanese yen in the wake of this data out today. Now, the International Monetary Fund has adjusted its world growth forecast for 2023 as it warned that the financial system is not out of the woods yet and could still result in a new crisis. Let's take a look at what's been said by the IMF. It forecasts real GDP growth of 2.8% in 2023 and 3% in 2024, 1/10 of a percentage point lower than it forecast in January for each year. In 2022, the economy grew by 3.4%. Now, this adjustment reflects weaker performances expected in Japan, Germany, India, and Brazil. Meanwhile, as for the UK, the IMF expects a shallower contraction than had previously been expected, but says the UK will remain the worst performing economy in the G7 with a contraction of 0.3% this year before a 1% rebound in 2024. I want to show you what's happening with sterling against the US dollar at the moment. We are currently bouncing up underneath this level of resistance, which I've still got drawn on this chart at 124.46, which were the highs that we had back on the 23rd of January this year, and earlier than that, back in the mid-December 2022. So that's still a line of significance, despite the fact that we have beaten that in the last couple of weeks. So looking at a little change picture for sterling against the US dollar. Against the euro, this is sterling trading sideways at 113.80. The IMF, meanwhile, has urged member countries to keep tightening monetary policy to fight persistently high inflation. Now, this is according to the IMF chief economist, Pierre-Olivier Gourinchas, who said inflation is still the bigger problem. Price stability should be prioritized, he says, over financial stability risks for central bankers' monetary policy. Now, he was asked whether continued rate hikes were creating bigger stability risks, and his firm assessment was a no in response to that. He said the financial instability looks very much contained. Adjusting monetary policy now based on stability risks means that we are not doing enough on the inflation front. That's creating a problem of its own. He added that only in the event of a very severe financial crisis should those priorities be reversed. Now, inflation is very much what the market is now focused on. This afternoon at 1:30 p.m. UK time, the US Consumer Price Index is expected to slow to 5.2% in March year on year after a 6% rise in February. But the Core CPI is forecast to accelerate to 5.6%, a 10th percentage point more than the previous month. Now, this is important because this is stripping out food and fuel. So this is the underlying CPI number that markets will be watching. So if the upside risk presents itself there, could there be an opportunity to buy the US dollar? This is the dollar basket that we are at. The lows that we had yesterday at 101.72. And of course, as we know, the way to trade this is through the euro dollar trade. And so anything representing potential uplift in core CPI stronger than expected. I fully expect yesterday's gains for the euro to be reversed, and we'll see a short position taken here. Now, if you are short on euro dollar going into the trade today, on potential upside risk to the CPI number, your stop goes just below the 110 level with a trade at 109.18. We're looking to break this 109 level to go down to the 108 potentially if we see a stronger than expected print on US CPI today. Now, in amongst the other areas to watch out for in terms of what's happening with the US CPI number and, of course, the US dollar, is what's going on the commodity markets. As we see the dollar move, we get an inverse move for many of the main commodity markets because of price action. Let's take a look at what's been happening with gold. Gold's had a particularly good start to today's trade, and indeed we're up for a second day in a row. In today's session, we went back up above the 2020 level, albeit briefly today, and a little bit of a pullback. We're currently trading at 2015. This is $2,015 or $16 the ounce. But I think whichever way you cut it, you can see these new up-to-date higher highs. And in fact, what was it, Wednesday last week, where we saw the highest print for the price of gold not seen since March 2022, just before that high that we saw. And I think the markets are on this trend. And if you have been trading this long, you want to continue to bring your stop loss up. Now you'd be below the 2000 level, and a stop loss there would ensure you against any fight back if you're long on the price of gold. Now, for more on the price of gold, I highly recommend you read the Daily FX report issued by Warren Venkatas, the article on gold he published yesterday afternoon ahead of the US CPI data. Now, a bit later on at 3 o'clock this afternoon UK time, we got the Bank of Canada publishing the conclusion of its latest monetary policy meeting. Economists anticipating the status quo here. The overnight rate is expected to remain at 4.5%, as it's been since January. At its last meeting in March, the BOC stated that it should continue to hold the rate at the current level should economic conditions develop broadly in line with expectations. So far as the dollar CAD is concerned, we've got this rising line of support. If you look at the chart, you can see that we're currently trading at 134.61. Now, this rising line of support coincides with the red line here, which is a 200-day moving average just below 133.96. So we've got some nice support below where we are. The Bank of Canada is the first of the major economies to pause its tightening cycle. And if it comes to pass today that we see a continuation of this pausing, then it's unlikely, I think, to be much move. If there is the slightest hint that the Bank of Canada is prepared to put its foot back on the pedal, you'd be selling this market, and you then be looking for potential test this rising line of support for the dollar against the Canadian currency. Also tonight, the Fed minutes we published from the Fed's last meeting back in March. They're due to be released at 7 o'clock this evening. Traders will be looking for clues on the monetary path from the central bank, as well as the impact of the banking stresses that we saw back in March. Now, banks, that concern we had in the banking sector, which is still bubbling under the covers as far as the markets are concerned. I think we'll get more details on that at the back end of this week when we see the likes of JP Morgan start to report earnings. Turmoil in the banking sector has led some to expect the Fed to possibly to cut interest rates sometime this year to alleviate some of the stresses in the market. But that sticky inflation number, which I think we'll get further evidence of later on today, could well see the Fed stay alive to the possibility that interest rates will have to continue to see a rise to quell some of that inflationary impact that we're getting for many of these markets. Now, let's move on to another area of the market. And I want to bring up a chart of Deutsche Bank. Deutsche Bank is one of these stocks worth watching this morning. It's not a big story that's broken today, but the Financial Times covers this in some detail. The Deutsche Bank is winding down its remaining software technology centers in Moscow and St. Petersburg. We saw Deutsche Bank rise in the markets yesterday for the second day in a row. Now, if this story is confirmed, which comes in the wake, of course, of the country's invasion of Ukraine in Russia, the decision ends 2 decades of heavy reliance on Russian IT expertise for Germany's largest lender. If we see this come to pass and it's proved that it's effectively cutting costs, then it will be a positive stock story. Ahead of where we are, we're going to open at 957.6 at the top of the hour when the German market's going underway. Ahead of where we are is this red line here, which is the 200-day moving average, which we know is quite often a headwind for any movement in the market. That's at 973, so around about 15 points above where we are at the moment on the German listed shares of Deutsche Bank. The FT says at the start of the war, Deutsche Bank employed 1,500 people in the lender's Russian technology center who were responsible for developing and maintaining software for the bank's global trading business and main corporate banking system. There will have to be some sort of plan in place to replace that if indeed this is confirmed by Deutsche Bank today. But it's certainly one of the stock stories to watch out for as the European markets get underway. Let's move back into other areas of the market, going back into some of these commodities. So I just want to update you on what's happening with the price of oil. You see a continuation of the recent rise that we've seen. And this gap that we saw, you'll remember, was the day on which we had OPEC suggesting or saying it was going to cut a further 1 million barrels from the price of oil. It's really bubbling around the 85.50 level at the moment. Second day in a row of gains for the price of Brent. Let's take a look at a couple of other stories. Tight supplies coming through for both sugar and coffee today. You can see sugar here. This is up at 11-year highs. And coffee, Robusta, up 2.96% yesterday, currently at levels not seen since the 25th of August. If it breaks that line, it will then go to levels not seen since the 30th of December 2021. You've then got to go back in coffee for a lot longer, I think, before you see it at these highs again. So coffee is one of those areas of the market to watch as we see tightened supplies hitting the market's overall performance with price action with a very sturdy gain in yesterday's session. That's it. We are back at 10:30 with Chart in the Markets. Watch out for Deutsche Bank. Start of today's trade.